Welcome to this deep dive. We're here to shortcut your path to being well-informed on sustainable finance. Today, we're digging into the latest global trends, looking at fund flows and also this really interesting fund naming phenomenon. We're drawing on the recent Morningstar Sustainalytics report and also some observations from the Y Perspective podcast. Yali and I posted about this on LinkedIn. She follows this whole sustainable investment narrative really closely. So our mission, figure out where sustainable investing is really heading.
Okay, let's jump in with some top-line numbers. The second quarter of 2025, it actually saw a notable rebound for global sustainable funds. We're talking an estimated net inflow of about $4.9 billion.
Yeah, that's quite a turnaround from Q1 when we saw those redemptions.
Definitely.
And what's particularly striking is that Europe was clearly the main engine behind this recovery. They poured, $8.6 billion of net new money into sustainable funds.
Wow. Okay, so Europe's really driving it.
Absolutely. And that's in stark contrast to the United States, which, well, it continued to see outflows. Another $5.7 billion left U.S. sustainable funds. And that marks the 11th straight quarter of withdrawals there.
11 quarters, yeah. It's quite a divergence. It might suggest that the clearer regulatory frameworks in Europe are perhaps building more investor trust, while the U.S. market seems to be dealing with more maybe skepticism or even political headwinds.
That makes sense. And bringing it closer to home for a lot of you listening, especially in Canada, Canada actually kept its positive streak going. It attracted around $162 million in net new money.
That's right.
Pushing total Canadian sustainable fund assets to, $40.5 billion by the end of June?
Exactly. So Canada's showing some resilience there.
Is it carving out its own path, maybe? Different drivers than the U.S.?
Well, it's smaller scale, obviously. But if you look at the big picture, Europe represents a commanding 85% of global sustainable fund assets.
85%?
Yeah, it highlights its huge influence compared to the U.S. at about 10% and Canada just around 1%. But Canada's steady growth, even if smaller, it does show a more consistently positive sentiment compared to the U.S. right now.
Okay, interesting. So shifting gears a bit, because this is another really significant development we saw. The sheer volume of fund renaming activity, especially in Europe. What's going on there?
Ah, yes, that's a big story. In Q2 2025 alone, close to 600 European funds were renamed. 600.
Just in one quarter?
Just in Q2. And this was largely driven by asset managers, rushing to comply with the EU's ESMA fund naming guidelines. Those guidelines had a deadline of May 21st, and they're really designed to tackle greenwashing, to make sure fund names actually reflect what the fund does.
Right, clarity.
Exactly. So if you look back over the past 18 months, the estimate is around 346 funds have been renamed. And these funds represent about $1 trillion in assets. It's almost like the financial world decided to give these funds a fresh coat of paint, so to speak.
$1 trillion worth of renaming. So what did these changes actually look like? Was it just funds dropping ESG from their names, or was it more complex?
It was quite varied, actually. You had about 383 funds that dropped ESG-related terms altogether. For instance, the Nuveen Global Infrastructure Impact Fund just became the Nuveen Global Infrastructure Fund, the simple removal.
Yep.
Then another 186 funds, they replaced terms. So something like the LNG ESG Global Corporate Bond Index Fund changed to LNG Global Corporate Bond Screened Index Fund, replacing ESG with screened.
Screened, right. More specific, maybe.
Potentially, yeah. And interestingly, you even had 26 funds that added ESG-related terms to their names during this period.
Huh. So it wasn't all just about removal. What does this all imply then? If a fund changes its name, does that automatically mean its strategy changed too?
That's the million-dollar question, isn't it? And what's fascinating is that, no, dropping ESG terms didn't always mean a change in the underlying investment strategy. Yeah. For many of these funds, their core sustainability focus, the way they actually invest, it remained intact. The name change was more about aligning with the new, stricter definitions in those ESMA regulations, not necessarily because their approach shifted.
So compliance rather than a fundamental change in philosophy for some.
Exactly. It sort of suggests a maturing market, perhaps, a recognition that clear, accurate labels are just paramount now.
Okay. Were there any new terms that started popping up more, becoming more popular as alternatives?
Oh, absolutely. We're definitely seeing terms like transition, pathway, and CTB, that stands for Climate Transition Benchmark, gaining traction.
Transition, pathway, CTB.
Yeah. And these often signal, a strategic focus on companies that are actively moving towards a lower carbon economy. They're not just buzzwords. And for passively managed funds, words like Select, committed, advanced, enhanced, and tilt are emerging as popular alternatives too.
Interesting vocabulary shift. So bring this back to you, our listener, especially if you're in Canada. What insights can we pull from Europe's experience here as Canada thinks about its own path for sustainable finance rules?
Well, Europe's proactive approach, using these stringent naming guidelines to fight greenwashing, it offers some really critical lessons, I think. Right now, Canada's own sustainability disclosure standards, the CSSB ones, they're currently voluntary.
Right, voluntary for now.
But here's the thing. Any Canadian fund manager looking to operate or, crucially, sell their funds into the European market, they'll have to comply with these EU regulations anyway.
So the international rules have reach.
Precisely. It really highlights how international frameworks are becoming increasingly crucial. They're shaping the landscape even for domestic markets like Canada as they figure out their own regulatory journey. The international framework matters a great deal.
That was a really valuable deep dive. We've seen, sustainable fund flows are pretty dynamic. Europe's leading a rebound. And this huge reshaping of fund names,
Yeah,
driven largely by that push for regulatory clarity in Europe.
definitely a lot happening.
So for you, the curious learner out there, here's something to think about. How will this global drive for transparency and these evolving international regulations, how will they continue to shape what sustainable investing truly means? And maybe more importantly, what impact might that have on your own investment decisions moving forward?